Fellas. Cooper, thanks for
Hey,
getting dressed
guys.
up for this, man. Nice.
Oh yeah, I had to put on my best outfit for Jess. I always want to impress him, especially after I got rid of my beard. I just feel like I got to come through somehow.
I appreciate that. We appreciate that. It's noticed and recognized. You guys are in Argentina right now, so thank you for jumping on with us. Obviously, yesterday, Jesse token launch was the talk of the timeline. I know you guys have been, probably continue to be deep in the math and in the slopes and in the thinking through the sort of big question of how are we initiating markets around assets in a permissionless, decentralized environment that we're acting in. And I thought it'd be great just to check in with you to see how you guys thought it went. There's lessons from it, the attempts. I think there's a lot of commentary on the timeline around snipers continuing to eat, which I think is just deeply offensive to most token holders. But I'm curious, maybe just to start off, how did the token launch go in your mind?
Yeah, can you guys hear me? My internet is so bad. Okay, perfect. Yeah, so I think the token launch, I think went pretty well comparatively to sort of how we thought it was going to go. I think Jesse love Jesse to death. Obviously, he's a wonderful supporter of us. He did make it as hard as possible by sort of I think on purpose, by the way, that he wanted to sort of make it as adversarial as possible to sort of show what these things can look like and the things that creators can go through when they're not crypto native as much. And so putting ahead of time this is the CA, or not the CA, but this is the timing and this is what we're going to do, it makes it hard to do a token launch. But I mean, I think at the same time, a lot of people have a lot of criticisms of sort of the model that's being used, but everyone always says there's a bunch of things you can do to solve this problem, and then when those happen, they don't solve the problem either. So I think fundamentally, it's a very difficult problem to solve, and there was some learnings from yesterday. I think I underestimated the demand slightly, and we underpriced it a little bit, but overall, I think that the chart looked pretty good and it sort of found a level that was pretty safe. And with these token launches that are larger in size, what you'll see is that sniping is increasingly worse because it's easier and there's more sort of it's a lot easier to make a lot of money when the token runs up a lot more. And this has historically been going to become a problem as we increase the size of some of these assets. They always change every single second, and so I'm a little unsure what the actual numbers are, but I think for us, we have learnings from this and we know directionally what we can improve, but at the same time, we understand that it was not optimal for everybody, but
can you guys just go ahead.
I just think that the launch actually went pretty well, right? He forecasted it in advance. Everyone and their mother knew about it. You had so much time to set up whatever sniping mechanisms or techniques or whatever you wanted to do. And at the end of the day, his token's worth almost $20 million with $5 million in liquidity. It's not a thinly traded asset. And I think a lot of the people who are kind of complaining about sniping just honestly are less sophisticated than other people and are kind of jealous. They wanted to get in early. They wanted to make more money. I respect them for it, but are they mad because someone else bought someone's token at a better price than them? Is that actually what they're mad about?
Yeah, that's exactly what they're mad about. I mean, can you guys just talk through? So Jesse comes to you and says, "I'm launching ticker Jesse." What are the big decisions that you guys need to make to decide how to design the kind of market initiation mechanics?
Well, Doppler
already, the base team.
I was just going to say, Doppler already is supported in Zora and the Coinbase application and is literally designed to have customizable markets for each individual asset that you want to launch, right? And so they already have robust infrastructure for calling the Doppler smart contracts, for creating tokens, using our auction software to bootstrap the initial liquidity. When they come to us and want to specifically launch one of these high value assets like Jesse, the question is, what parameters or inputs are they, looking into passing into Doppler? And Austin, spends a lot of time with them on that. And so maybe Austin can share how he determines the actual parameters that make sense to input into Doppler in this case.
Yeah, so the base team did a lot of work there was a lot of work that went on behind the scenes on improving the design. They did several token launches for other creators to try to sort of figure out a good mechanism. So there was going on behind the scenes on like changing the parameterization, changing the initial starting market cap, and changing the curvature of how the bonding curve works. And a lot of those were, we felt pretty good about those previous launches. And so, there was a lot of iteration that went on behind the scenes on like, what should this price be? What should the starting price be? If we change the starting price, what impacts do we have? And I think, we underestimated the demand a little bit more than we probably should have. But I think like directionally, we had only been increasing the price. We had only been increasing the curvature.
Yeah. They when they come to us, there's Doppler has support for multiple different kinds of auctions, and the specific one that Zora uses is a multi-bonding curve model. And the question there is broadly like, what price do you start the bonding curve at? How many positions do you place, and at how much liquidity you place in those positions? And like, I'd be curious your guys' perspective. Like, if you had to predict what price the Jesse token should come out at, like, what do you think the initial price should be? And where are you targeting like a stable market cap, right? Like, yeah, I'd be curious how you guys would have thought about it.
We did talk about this on our show yesterday before it launched, and I think both of us kind of guessed around it was going to peak around 20 plus mil, and then kind of guess like stabilize around somewhere in the kind of 12 to 14 range.
That seems accurate, right?
Yeah.
Like that's kind of where we're hanging out around right now. I think we ended up looking, or yeah, Jess, I'm curious if you how did you think about like starting price, or like what price do you think is like fair to launch it at?
I mean, I think my concern is that this entire structure is wrong.
Okay.
Or that we can't win doing it. That the fact that it is, and I know like I think this is a very naive take, right? Because I think I'm comparing it to better than what the other versions actually allow, right? I think one of the dynamics we see here is that you can go to Dex Screener and you can click on a link and you can see just how much money Sniper's made, right? And you don't get to see that in public markets or private markets, et cetera. And so there's that dynamic here. But I think it is just like, I don't know what I'd start that fucking thing at. Like, I literally do not know. I don't know how. And then everything sort of is downstream of that. And it just seems to me that the bonding curve launch is maybe the best that we have right now, but unlikely to be the thing that ultimately wins this market, especially assuming that we're having maybe identity or this goes more traditional structures where you are sort of able to know who the counterparties are in some way. I don't know. It seems like a lot of value is being left on the table here, or at least people see that I think it's the sense that value has been extracted by some nameless number, not so much that I didn't get in cheaper. I mean,
sure.
There's a lot of that.
That makes sense. I think that, so Doppler actually has two different types of auctions that we support. And one of them is this multi-curve model in which you have to determine the initial starting price and place these specific curvatures and place liquidity along them. And that's what Zora is currently using and uses for all their content and creator coins. We actually do have a separate auction that's a dynamic auction that we do think is better suited for high value launches. And the difference there is that the dynamic auction actually you can start it at an aggressively very high price, and it'll do a Dutch auction until you find a clearing price. And so there's actually no market incentive to snipe in that model. And so we do actually believe that for assets above a certain price threshold, it does make sense to use a completely different mechanism. And I think that this is maybe a good evidence or kind of fact for that, where this asset and this creator coin may be sufficiently high value or popular that it actually might necessitate a different mechanism than what Zora is using for, let's say, if I go on there and create a creator coin, those are very different market structures and incentives. And so in that case, the question doesn't become, what price should I start this token at? It's like, how much am I trying to raise in the initial liquidity auction, and what's the clearing price or what's the floor price people are actually going to buy at? And so, in this case, I think we started the token around $500,000 or so, and it ran up to, maybe $25 million. And you guys kind of, forecasted that, or, that was kind of in our expectations as well. We expect it to be 2 to 3 times higher value in theory than any other content or creator coin available on the platform. And so in this case, you could have actually designed a different market structure using smart contracts that we already have deployed on Base, where you could have started the auction at, let's say, $25 million and had it go down in price if there was no buying interest. I think the reality is snipers still probably, snipers are just sophisticated people that want to buy tokens early, and they're not like some magical thing. I think that we do a disservice in the industry when we treat them as a special category. Like, it's not illegal to be more sophisticated than people trading against you. And so in that case, like, if you started a token at $25 million, like, snipers are still going to buy it at $25 million, honestly, because they think it's still going to 3x or whatever it is. It's just an arbitrage opportunity at that point. And so I do think that we are going to move to a world where some of these higher value token launches are going to have very different market structures than content or other creator coins.
I think like one thing I'd also highlight is that like it actually is a known value how much value gets leaked to underwriters or snipers or price discovery in traditional financial markets. And it actually ironically is a very similar number to what was extracted yesterday by the snipers. It is on the order of like 7 to 10% of the entire value that's being generated is lost. And so I do think that this model needs improvement, and we have done a lot of improvements, but in some sense it actually is better than the alternative and of just like giving 7% to the underwriter.
I just wonder if it's one of those things that just feels worse, and therefore that's meaningful.
I think that's true, and I think that's something to be said about that as well.
Yeah.
Should he have done like a pre-sale or something?
I don't think pre-sales solve the problem. I think many of these mechanisms that people come up with inherently kick the can down the road, and they don't solve the underlying problem, which we believe the underlying problem is the price is wrong. The price is wrong. There's value to be extracted by buying and waiting for the price to recover. Pre-sales don't solve that, and they, if anything, make it worse because they give a higher percent of the pre-sale to other people. Everyone's always like, "Why didn't you run an auction?" And I'm like, what kind of auction? They're like, "Oh, what about a pro rata auction?" And I'm like, "Okay, what price are you going to clear that pro rata auction at?" And like, these things sound technical, and they are very hard.
I think that so much of the commentary that I saw was really one that done from a place of privilege where you don't have to make trade-offs in this stuff, right? And so I think it's useful from a signaling perspective, not useful in actually moving our understanding and the experiments forward. And so I think the one thing that I feel lucky is to be able to talk to you guys a lot. Like I've seen the behind the scenes of, and I think probably know better than most, just the amount of work and obsession that goes into trying to solve this problem. And so I think if I zoom out, Jesse token launch went fine. Like that was it could have gone a lot worse. Probably could have gone a little better. And so it feels like you're on the right side of that gradient there. And then I think we need to hold this big open question, which is anybody who's going to launch a token, whether you're approaching it as a founder, launching the next $1 billion thing, or you're launching a meme coin for something you care about, being thoughtful about the strategy for how a token market is initiated is absolutely essential. And I think there's still a lot of design potential out there to solve that problem. And this is only going to continue to evolve as I think regulations change and new actors come in, et cetera. And so I think holding that deeper awareness around both what the trade-offs are at the meta level of traditional versus going on chain, and then at the individual decisions of how you want to initiate these markets is key. So I love it. I think this is a fascinating area. I think you guys are the smartest in the business doing it. So
we appreciate that. Yeah. We spend an utterly obsessive amount of time thinking about these things and also optimizing for how quickly you can iterate on these markets. So, you can launch another token today on Zora or the Base app using Doppler, and it's going to have, a different market structure. And if they want to go in and change that, it's maybe a 5-line code change in TypeScript. It's super, super easy to customize these markets in a way. And we're going to make it as easy as possible for teams like the Base app and Zora to continue to iterate on these market structures. And I do believe that as we gain more understanding of, the buying dynamics and the way the distribution works, hopefully we can move past this like boogeyman of snipers are bad when they're actually providing kind of a valuable service in the ecosystem by being first purchasers.
Fucking bold statement.
That's why I love Cooper.
Oh,
Dude.
yeah. No. All right.
People defending high frequency traders on Wall Street.
Yeah.
I do think that high frequency traders also provide a valuable service in the economy.
This is fucking capitalism, y'all. Which is like, I mean, I think my overall take, and it does. I also sympathize with everybody. Like, I don't love seeing how much value seems to just be extracted from these token launches, and yet the thing about like, is the playing field known and is it open and fair? And I don't know you can make the argument that it's not open and fair if you kind of look at the base level here. Like anybody can go be a sniper, really.
It's interesting, and I see a lot of parallels with the previous MEV and PBS marketplaces, right? Like the idea of being a block builder at some point was that you were sniping or doing other things on chain, and you were just more sophisticated and had access to better tools and resources than others. And to Flashbot's credit, they kind of democratized the ability for people to participate in the PBS supply chain. And I think that we're seeing or will see tools and people making it easier to democratize access to getting early into tokens, whether that's sniping as a service, whether it's different ways that you can pool together and kind of buy in bulk, or whether it's actual mechanisms built into Doppler in the market. I think that we're going to start seeing that, and I hope that we can get a little bit more specific about order flow isn't bad, buying tokens early isn't bad. We need to be a little bit more cautious and considerate about what is bad about sniping activity. And what's bad about sniping activity is that you're mispriced, and Doppler is really designed. And what we want to do is build permissionless markets that can find the right price as quickly as possible. And that's what's ultimately going to prevent sniping, is having a price that the market wants to pay has information asymmetry and other people getting access to it early.
I cannot wait till our clippers put the jump cut of you being pro sniping out there on the timeline so you get to own it. It's going to be good. It's going to create a lot of opportunity for you to fully articulate your position.
People are going to be like, why the fuck does Doppler like snipers? It's going to be really, really funny.
All right, guys, we're tight on time today, so we're going to leave it there. Appreciate you hopping on. And I know, we'll get you on again to talk about this in more detail, because I think it continues to be a very interesting and potentially very valuable part of the market here. We'll get you on some good rants.
Thanks for having us. And overall, we're super excited about the Jesse token launch. We think it went well. If you look at similarly traded assets on Solana, the liquidity to market cap ratio is wonderful. Thanks for having us.
Man. It found its band.
All right, guys. Talk later, Austin.
All right.
Yeah, we'll chat.
Bye.
Cheers.